Hello class, hope you are doing well. Today we are going to start next chapter of class 11 accountancy, that is ledger. This chapter is very important because throughout your life, whenever you study accountancy, this ledger you have to prepare. Okay, so let's start. Ledger. What are the content of this? Meaning of ledger, need and importance of ledger, advantages of ledger, difference between journal and ledger, format of ledger, rules of posting, and a illustration exercise you have to done from your book. Okay, so let's start. What is the meaning of ledger? The book which contain a classified and a permanent record of all the transactions of a business is called ledger. That book which contain all the records, that means the record related to all the accounts, are called ledger. In this we prepare separate account for each and every account, that is nominal or real or personal, that will be prepared in ledger. Okay, need and importance of ledger. It is important for knowing the balances of each account. In this, we able to learn the balances which are left in ledger account. Each and every account, that means each and every person's account or nominal account or real account are made in this, and you are able to know whether you have to pay or receive from this account. It gives short information about the account. You can get short information about the account. It is needed for making trial balance. Okay, the trial balance contain all the account and the total is made, spent and received, liability and asset, that will be tallied. It helps in knowing how much amount is due from each customer and how much amount the firm has to pay to each supplier. So, the amount due from each customer and how much amount the firm has to pay to each supplier is determined by ledger. A trading and profit and loss account can only be prepared with the help of ledger balance. As you know, after making ledger, you have to prepare trial balance. So, if you want to make profit and loss account, you have to prepare ledger accounts. Because after knowing the balances, only you can post them into the profit and loss account. Okay? Advantages of ledger. All accounts are open on separate page in this book. Okay? A separate trading and profit and loss account can only be prepared with the help of ledger, as we prepare in previous slide. A balance sheet can also be prepared with the help of ledger balances, which show the financial position of the business. As you prepare ledger, you are able to know the balance from each account, and after knowing the balances, you can easily determine what are the financial position of your organization. Any type of information relating to the business can easily be obtained from the ledger. Okay, you can easily find out the any information regarding that account, because all the transactions of particular account, a particular person, a particular thing is prepared separately, and every information should be posted in the ledger. Okay, what is the distinction between journal and ledger? So, journal is a book of original entry in which the transactions are recorded all the first time as the when they take place. As you studied in previous chapter in your book, that in ledger we enter all the transaction first time. Okay, but ledger is just classified and permanent record of all the transaction of the business. That is called ledger. Ledger is prepared on the basis of journal, so you know this very well. Full detail of transactions. So in journal we have narrations, so you can get full information about the transactions. But ledger, there is no full disclosure of the transactions, there is no narration. So this is not so narrative about the transaction which are posted into the ledger. Process of recording entry, name as journalizing, and this is called posting. Accuracy, journal generally don't test accuracy, but in ledger we have to maintain accuracy. Okay, tested and prepared try balance. Okay, order of recording, chronological order, that will be on the basis of time when they occur, they will be posted in journal. And in ledger it will be analytical order. Analytical order, when you analyze every transaction, then you can post them into the ledger. So this is the basic difference. Okay, now this is the format of ledger. It contains date, particular, JF, that is called journal folio. JF is here, journal folio. Okay, why journal folio is written here? Because we post every transaction from journal. So we write that page number from which we record that transactions. Okay, so it will be helpful if you are confused in any transaction, you can tally them easily. The amount, again the date, particular, JF, and amount. This side is debit side and this side is credit. Okay, so according to the account you can post the transactions, right? Rules of posting: all the transactions relating to the account should be entered at one place. So you have to make only one account for any one transaction or any one person or any one account. Okay, the word to is used before the account which is appear in the debit side. Okay, and similarly buy on credit side. It is not necessary to write account after the personal account. You can easily skip to write account on before the account which is related to the personal account. Person account, that is, if you write Ram account will be not written, only Ram debit is written and amount should be posted. Similarly, amount which have been posted on debit side of an account should be posted on credit side of another account. Okay, so there is always double entry as you studied in the accountancy, so it will be recorded on both debit and credit side. Next is, if any account has been debited or credited in journal entry should be posted on debit or credit of ledger. Okay, so if any account, suppose if you make an entry that cash account debit to capital. Okay, and you are making cash account, so in cash, in the ledger of cash you have to post to capital account on debit side. Okay, remember this. In the particular column, the name of another account which have been credited or debited for journal entry should be posted. Okay. Closing of personal account by the word by balance CD or to balance CD used for the closing the personal account. Closing of real account, the by balance CD to balance CD used for the closing real account. And nominal account, these account not required to be balancing. Okay. Balancing of ledger. Balance is the difference between the total debits and total credits of an account. When the posting is done, many accounts may have entered or entries on their debit side as well as credit side. So the net result of such debit and credit in the account is to be balanced. Okay, you can make total of debit side and total of credit side and minus them or subtract them to find the balance. The balancing means the writing of the difference between the amount. Whatever difference comes from both the side, it should be written, and the grand total of the both side is written in the end of the account. Okay, so you have to make the balance to be posted in ledger account, and that balance will be posted in try balance. Okay, all the amount should not be posted in try balance. Only you, the balance you are finding in the ledger account, in the particular ledger account, that will be posted in the try balance, and on the basis of try balance you have to prepare trading and PL account. Okay, balancing of different accounts. The balancing is done periodically, weekly, monthly, quarterly, or half yearly or yearly, depending upon the requirements of the business. Okay, the personal account, these accounts are generally balanced regularly to know the amount due to the person, creditors, or due from the person, that is debtors. Okay, so you have to prepare the balance of personal account in a regular interval, because you have to find how much amount you have to pay or receive from debtors or creditors, and it should be paid in near future, so you have to ascertain them in regular basis. Real account, these accounts are generally balanced at the end of the financial year when the final accounts are being prepared. However, the cash account is frequently balanced to know the cash on hand. Okay, so at the end of the year when the final accounts are made prepared, however the cash account is frequently balanced to know the cash on hand. Okay, so cash is a very important element. You have to prepare the balance of cash generally at the end of financial year, and final account are being prepared. Okay, a debit balance in asset account indicate the value of assets, okay, owned by the business. Asset account always show debit balance, right? Illustration. So this is a journal entry of a company, and you have to post them into the ledger accounts. Okay, so first is cash account, right? So cash account to sales, the first transaction contain cash, so cash is debit, so its related account should be posted in the debit side of ledger. You can see two sales, right? Now next transaction is furniture to cash. Here cash is in the credit side, so the related account should be posted in credit side. Okay, now purchase to go in. This account does not contain any cash transaction, so we discuss this later, but we only discuss cash first. So purchases account to cash account, so cash here is on credit side, so the related account should be posted in credit side. Okay, quite easy. Now another last account that contain cash account debit to interest. So in this account cash is on debit side, so interest should be posted in Which side? Very good. That will be on debit side. So after posting all the transaction, you have to prepare balance. So this side total is 5 plus 1 6 and this side total is 17. So from 17 less 6,000, you will got 11,000. Okay, you will got 11,000 and this balance should be posted on that side where the balance is less. 11,000. This side is greater than and this side is not greater than credit side, so it should be posted in debit side. Okay, now sales account. Find out where is sales. Here is sales, so sales is on credit side, so its related account should be posted on credit side by cash 5,000. And another sales account we have to find. Yeah, this is this transactions. So sales is on credit side, so Mohan should be posted on credit side. See? Okay, and any last transactions, that will be Mohan. Okay, and furniture is more important, so we see the furniture account. So furniture account is here on debit side, so its related account should be posted on debit side, right over there. So this is the posting of ledger. This is quite easy. You can prepare all the account on the basis of this. Quite easily you can prepare, and easily you can post all the accounts from ledger, from journal to ledger. Okay, now this question is for you. You have to prepare all the ledger from this question, and this is homework for you to complete it. In next class we will solve some questions from your book, that is DK Goel, so you can understand them easily. Okay, thank you.